Hello everyone. In this exercise, we are going to record a series of events in what is known as a horizontal statement model. That is, we are going to record their effect on the balance sheet, the income statement, and then also their effect on the statement of cash flow. Now, additionally, for the statement of cash flow, if it affects the statement of cash flow, they want us to label it as either an operating activity, an investment activity, or a financing activity. All right, so let's look at event number 1. Acquired $13,000 cash from the issuance of common stock. When we issue common stock in exchange for cash, cash is going to go up by that amount, and common stock is also going to go up by that amount. Additionally, because we're receiving cash, it's going to have a positive effect on the statement of cash flows. Now, in terms of what type of activity it is, remember our operating activities are directly related to the company's core business operations. That is revenue and expense related. Investment activities involve the purchase of investments or long-term assets, and financing activities involve the issuance of long-term debt, the issuance of common stock, repayment of debt, payment of dividends, and things along those lines. Therefore, the issuance of common stock is a financing activity. So we're going to label that as a financing activity. Now we're going to go to the second event. Purchased inventory for $5,300 in cash. All right, so over here on line 2, we are going to decrease cash $5,300 because we purchased the inventory using cash, and we're going to increase the inventory account by $5,300. All right, this is also going to affect our statement of cash flow because we used cash for the purchase. So it is going to decrease our cash flow by $5,300, and that is an operating activity because our inventory is related to our core operations. That is what we are in business to do. Thus, it is an operating activity. Now, one thing that you're going to notice is these first two transactions, they had no effect whatsoever on our income statement accounts. Remember, our income statement accounts are revenue, expenses, and net income. So these first two transactions did not affect the income statement. However, the next transaction will. Event 3. Sold inventory costing $3,180 for $5,406 cash. Now, when we record a sales transaction, remember that we have two pieces. We have to record the revenue piece and the cost piece. So we're going to start with the revenue piece. All right, and that's what's labeled 3A here. The revenue is always going to be based on the selling price. In this case, they tell us that we sold it for $5,406 in cash. So we're going to increase cash by $5,406. Retained earnings is also going to go up by $5,406. Revenue is going up by $5,406, and that is going to result in an increase to net income of $5,406. Because cash increased, we have to record that over here also in the statement of cash flows. Revenue is part of our operating activities, thus this is an operating activity, okay? Now we're going to hop up here and we're going to record the second piece, okay? Remember, the second piece is recorded at cost. This is where we record the expense associated with the inventory, and we also get the inventory off the books. We remove it from the books at cost. They tell us here that the cost was $3,180. So inventory is going to go down $3,180. Retained earnings is going to go down $3,180. Expense is going to go up $3,180 in the form of cost of goods sold, which makes net income go down by $3,180 because remember, revenue has a positive effect on net income, but expenses have a negative effect. And this does not affect cash, so we can just leave those items there blank. So let's go up here to event 4. Paid $750 for advertising expense. Okay, so line 4, cash goes down by $750 because we paid $750 in cash. Retained earnings goes down by $750. Expense goes up by $750, which results in net income going down by $750. Again, cash, you can go back here, cash, down $750, and this is an operating activity because it's a general revenue and expense activity. In this case, it's an advertising expense, but that is an operating activity. So at this point, we can go down here to the total, and we can total all of these lines. And for the total here on the statement of cash flows, we put NC in this bottom line, which represents the net change in cash.